Most accountants are still treating artificial intelligence like a future upgrade, when in reality, it is already rewriting the rules of accounting right now. And if you stay until the end of this video, you will clearly see how AI is transforming financial services and exactly how to position yourself on the winning side of this shift instead of being caught off guard by it. Accounting has always evolved slowly. New software came in waves, but the core work stayed the same. Data entry, bookkeeping, reconciliations, audits, and compliance dominated the profession for decades. Then AI entered quietly and almost unnoticed at first. It did not announce itself as a replacement. It showed up as a helper, a tool that could speed things up. But what most people missed is that AI was not just making accounting faster, it was changing what accounting is. Artificial intelligence now assists accountants by automating repetitive tasks that once consumed entire workdays. Data entry, invoice processing, expense management, all of it can now be handled with minimal human involvement. But AI does not stop there. It enhances analysis, forecasting, fraud detection, and decision-making through predictive analytics and real-time insights. This shift is freeing accountants to step into more strategic advisory roles, and that is where the real transformation begins. The uncomfortable truth is that businesses no longer want accountants who only report what already happened. They want professionals who can explain what is happening now and what is likely to happen next. AI is the bridge that makes that possible. One of the first places AI made an impact was automated data entry and bookkeeping. Financial documents used to require manual input line by line. This work was slow, repetitive, and prone to human error. AI systems are now trained to read and interpret financial documents instantly. They process large data sets with speed and accuracy that humans simply cannot match. Errors drop, consistency improves, and accountants no longer spend their best mental energy on low-value work. Invoice processing and expense management followed quickly. AI uses technologies like optical character recognition and natural language processing to match invoices to purchase orders, categorize expenses, and flag irregularities automatically. Payments can be processed faster and more securely. Instead of chasing approvals and correcting mistakes, accountants gain clear oversight without micromanagement. But this is where the story gets more interesting. Automation is only the surface level benefit. The deeper change happens when AI starts analyzing financial data instead of just moving it around. AI-driven financial analysis allows historical data to be examined at a scale no human could realistically handle. Patterns, trends, and correlations emerge that were previously invisible. Forecasting becomes more accurate. Scenario planning becomes more realistic. Budgets are no longer static guesses, but living models that adapt as new data comes in. Accountants can answer questions that used to be impossible to answer with confidence. Real-time reporting changes the rhythm of financial decision-making. Instead of waiting for monthly or quarterly reports, businesses gain continuous insight into performance. Problems can be spotted early before they grow into serious risks. Opportunities become visible sooner. This transforms accountants into proactive advisors instead of reactive reporters. Fraud detection is another area where AI completely changes the game. Traditional methods relied on sampling because reviewing every transaction took too much time. That created blind spots. AI removes those blind spots by scanning entire data sets continuously. It identifies anomalies, unusual patterns, and suspicious behavior in real time. Fraud is no longer something you hope to catch later. It becomes something you actively prevent. Auditing also looks very different in an AI-driven environment. AI can prepare audit schedules, identify high-risk areas, and flag unusual transactions during the earliest stages of planning. Auditors spend less time searching and more time evaluating. When combined with secure transaction records, audit trails become clearer, more transparent, and easier to verify. AI even supports accountants beyond numbers. Contracts, invoices, and compliance documents can be summarized automatically. Research that once took hours can be completed in minutes. AI assists with communication by generating drafts, agendas, and structured insights. The result is less time buried in paperwork and more time applying judgment and strategy. What many people fail to realize is that AI adoption does not look the same across all accounting firms. Large firms were early adopters, using predictive analytics, anomaly detection, and automated compliance to scale operations and deliver deeper insights. Smaller firms are now catching up by using AI to streamline bookkeeping research and expense categorization. Automation tools that combine robotic process automation with machine learning are leveling the playing field. The benefits are clear and measurable. Efficiency improves, costs decrease, errors decline, productivity increases. Accountants using AI deliver higher quality reporting and more strategic advice. Firms become more scalable without burning out their teams. Yet this is where fear often enters the conversation. People ask whether AI will replace accountants, and the answer is no. AI replaces tasks, not thinking. It handles repetition, not judgment. Human expertise remains essential for interpreting results, making ethical decisions, understanding context, and communicating with clients. AI amplifies accountants rather than eliminating them. The real risk lies in refusing to adapt. Accountants who define their value by manual processes will struggle as those processes become automated. Those who redefine their value around insight strategy and advisory work will thrive. The future of accounting belongs to professionals who stay informed, adopt AI gradually, and invest in training. AI tools should be tested, refined, and monitored. Teams must understand both the power and the limitations of these systems. Most importantly, accountants must intentionally shift toward higher value services that leverage AI insights. This is not a temporary trend. It is a fundamental shift in how financial services operate. Accounting is becoming faster, smarter, and more strategic. The relationship between humans and technology is becoming collaborative rather than competitive. And here is the final truth to remember. AI is not the future of accounting. It is the present. The question is not whether AI will change your profession. It already has. The only real question is whether you will use it to elevate your role or allow it to pass you by while others move ahead.